Ladies and gentlemen, Gay Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is up another 0.3% there, but there were a little bit of fluctuations today. We'll talk about that, but market continues to grind higher with the today's move. Market is the S&P is back above my short-term moving average, and we just talked about this yesterday, didn't we? Where, you know, since early July, right? Since early July, or late July, I meant. Since late July, early August, once the price reclaimed my short-term moving average, right? And then cultivated higher high. Since then, right, since August 1st, we've only breached below my short-term moving average, the squiggly line there, twice, including today. One time was back in August 11th, right here. There was some shenanigan move there. I think a lot of people are expecting a follow-through, at least retest my midterm moving average. That never happened. We saw a shenanigan gap up. And then after that, what happened? Well, my short-term moving average continued to act as support. And you know, we were not even able to close below my short-term moving average on an hourly basis. See all those wicks? It was never able to even close below it. And this market has been extremely adamant about that. And then for the first time since August 11th here, we actually closed below it, right? This was yesterday, last hour yesterday. We closed below it and ended the day kind of weak, right? And we talked about how next support level might be, which is going to be 335 level, right? Because that's the gap area. Right, that's why gap areas are always good. It's a good thing the buyers deployed this back in August 11th and 12th. So later date, which is today, August 20th, 9 days later, we saw bears trying to bring it down, and that level act as support. We talked about yesterday, bears really truly want to bring it down. They will need to gap it down below 30.32, 30.33 and make this into an island top. That's the only shot that they have, because even if bears bring it down tomorrow or next week and fill the gap, that's just going to act as support. Bulls going to try to gap back up. Best way for the bears to really dismantle, do some damage, in this market, needs to see something. They got nothing at this point. They have nothing. There's no down gaps when we look at longer term charts. There's no bears. I mean, we talked about some of those bears divergences, which is weak. It's not as clean, potent bears divergence. We don't have anything, on the daily or weekly. We do have, only thing the bears can kind of work with right now is we are overbought, but we've been staying in this overbought level for entire month of August. It looks like it was already overbought a couple weeks ago. NASDAQ, it seemed like it was overbought, I don't know, a month ago or a couple months ago, and NASDAQ's been continue to move higher. Not to mention, we still got laggers, such as small caps and the banks, some of these. We got laggers. If they decided to make a move, that could keep the market float higher, elevated. And with this adamancy that we have and certain complacency that and sooner or later we will see certain pullback. The problem is, though, market can float up longer than you can expect. And when we do even see a pullback, market can grind like this for days and weeks and months. You know that? That's what you call correction through time. This is the reason why shorting this market in a soaring market is the most difficult endeavor. Anyone who try to make a living on shorting in the last 4 months, they have not able to turn profit on any of it, on any stocks, nothing. Because that's how difficult it was last 4 months. Even now where the market is, it is extremely difficult. to make that work. So we're back above my short-term moving average now. Let's check out that oscillator here real quick. And before we get into it, I think this is a level where potentially the bears are going to start talking about this potential head and shoulder formation. Well, the thing about that is we don't know that yet until we see some kind of confirmation. We need more than just potential level, especially in a bull market. You know, how many times, you know, I can show you, I can give you a couple examples where there's always been this potential things going right here. How would I remember this? Because I was covering this every single day with you guys. Remember? We talked about this. There's a potential left shoulder head, right shoulder that never played out. Actually, that was a level when this thing just went from 320 to 340 very, very quickly. This is why you don't want to come to a dramatic conclusion without substantiating from the price action. This is why it's incredibly important that we look at this and understand what the market is telling us, besides or instead you telling yourself, telling the market what this market should be doing. I mean, you go on social media right now, what are the people saying? Mostly bears, what are they saying? Well, market shouldn't be up here. Well, market is up here. You must accept that. You must honor that. You must respect that. Well, the true valuation is 50% lower. We're not anywhere 50% lower. And I don't believe we're going to get that this year. Maybe not even next year. You know, here, what was I trying to do? Oh, yeah, I was giving you a potential head and shoulder formation. Here's another one. Left shoulder, head, right shoulder. This one actually faked a lot of people out because I think a lot of people drew their head and shoulder neckline, something like this. And they thought this was the confirmation. The problem was, you can go back and check my video back in mid-May. Well, we had that gap area, which is support. That gap's still open as of today. I think at the time also had my moving average in that vicinity. I've adjusted this to accommodate recent price action, but this moving average at the time was just going up like that, and it was just keeping this level of support. That's why, again, when the market is thriving, you don't want to come into a dramatic conclusion just because you saw certain patterns, right? Again, that was that head and shoulder formation that never played out. There's this head and shoulder pattern never played out. I don't know. There's that double top people are looking at maybe that never played out. How is that double top never played out, but this double bottom surely did play out? Why? Because we're in an uptrend. When you're in an uptrend, these bullish reversals patterns seems to play out better than these bearish patterns. But if we're in a major primary downtrend, those double tops are going to play out better than those. There's double top here. There's a double bottom here, right? If we're in a downtrend, overall downtrend, those double tops going to beat. The probability of that double top playing out is higher than these double bottoms. But this was in an uptrend, right? Since the March lows. So we got the double top. We got the double bottom. Who won? The double bottom did. Why? Because we're in a bullish uptrend. So with that exercise, I just want to let you guys know that I think it's kind of when you get into a desperate mode in the market, you're looking to grab onto anything just to survive, and you're looking at everything that potentially will give you possible bear scenario. But I cannot, even if these things are coming down, and even we have the perfect form, I still can't say that's going to play out or not, because we have that support. We got the gap support. My midterm moving average is there, and we know that midterm moving average does have a pretty impressive resume. Let's go to the oscillator here real quick before I let you guys go. So, well, the oscillator has been floating around, elevated on top of its band for the entire month of August. And that's pretty crazy because I don't think I've ever seen that happening on this 65-minute chart. And with this pattern, and we've been analyzing this every single day since early August and late July, with that, this market is being very, very adamant. You know, if the market was in a up and down fluctuating market, which we've dealt with that, right? We've dealt with that in June, dealt with it in July and May, which market was more volatile, right? There are more corrections, pullbacks. You know, there are runs too to the upside, but there are sizable pullbacks also. So once we saw my oscillator floating up, elevated like this, and it still is kind of oscillating on top of the band, not coming all the way back down to the oversold level, but it's oscillating back and forth at the top of its band. Well, when you see this, market is extremely adamant. It is extremely difficult to call top, and market could grind higher like this for days and weeks, maybe months. I don't know when we're gonna see a steep correction, and I think it's a foolish endeavor at this point to try to figure out where the top is. Best way to navigate this market is to manage risk at this point, right? And manage risk and deal with position that you currently have. You know, you can hold some, of the positions, you can close out some of the positions, and you rotate funds to one asset to another class, and that's what you do. But this is not a level, obviously, to go aggressively, go full-blown bullish after this market had moved, in 4 months, right? Market has moved, like 55, 60%, right? I think 55% on the S&P, like 65, 70% on the NASDAQ in 4 months. You don't go all in long after market has produced that kind of numbers. You don't do that. At the same time, you don't go aggressively short either, because nobody knows where the top is. This is a market who took the risk. This is a market for those who took the risk back in March lows and April and May and June lows, and who's holding the positions and continuing to ride that positions and maybe close out some and holding some. And those people who took that risk earlier, they're the one who's benefiting from it. And everybody else who was out or has been shorting, well, it's been very, very difficult, because it's very, very difficult to make money shorting. And everybody else were out, were in cash, who didn't took that risk back in March and May, April and May. It's very, very difficult, knowing that we're potentially getting back into primary term uptrend, but it's extremely difficult to go full-blown bullish up here. So a lot of people are waiting for, expecting, potentially seeing a big decline. And I talked about this before if you guys been, following me for many, many years, I say this a lot. When everybody's expecting something, market is going to make sure you don't get it. Make sure you don't get it. And market is really, really good at conditioning traders to be in a complacency, complacent environment. So you gotta be sharp here. We can't think that it's gonna go on forever. Sooner or later, we will see a sharp pullback. Only problem with that is, are we gonna see a sharp pullback where market could come down 5, 10, 12%? Or we're gonna see like a 5% and then consolidate for months until November. You see? We'll continue to navigate this market together. I'll come back for you guys tomorrow night. Enjoy your evening. Good luck trading tomorrow.